Hey, good afternoon, everybody. Thanks for joining us today. Rob's going to go through the uh, charts like he normally does. And if you have any questions for him, just type them out. He'll get to them in order. And Happy New Year, everybody, because I didn't talk to you guys last week. I was away. So go ahead, Rob, anytime you're ready.
All right. Thank you, Frank. Good afternoon, everyone. Welcome to another Wednesday webinar. Welcome back, Frank. I hope you enjoyed your vacation from trading, and good to see you starting off the week already with some good trades to go ahead and kick off the new year. My name is stockdarts, folks, and the person we just heard, Frank, is StockGuy22. You can follow both of us on Twitter under the same names, YouTube under the same name, and then Frank is still working on launching stockguy22.com, but it should be done soon, and hopefully we'll have a new site for you guys to visit. But until then, you can always follow myself and some of my content at patreon.com/stockdarts. I put a lot of blog content on there, put some trade ideas, watch list sorts of trades, even some videos on different ideas as far as how to screen for trades. So if you're looking for more content from us, that's a good place to go, at least for now, and find some good ideas. Some of the stuff is free, some of it is subscription, but the lowest subscription is only like $8 a month. So a lot of good stuff there for anyone that's looking for extra content or extra information on trading from us. Other than that, let's go ahead and get started. We're going to do the usual. We're going to cover the four major markets. We're going to look at the S&P 500. We're going to look at the NASDAQ Composite, the Dow Jones, and the Russell 2000. Once we finish going over the major market indices, we're going to take a quick look at the U.S. dollar. We'll see how it's doing. We'll see how it's affecting oil, gold, and silver. And once we finish with that, we will go ahead and take some chart requests. So if anyone in here has a chart request, feel free to put it in the chat tab. You can put it in now, even though we won't get to it for about another half hour or so. Go ahead and put it in so that I get an idea of how much time I need to allot to the chart request. As usual, let me know if it's a name that you are looking to trade as far as entering, or maybe it's a trade that you're in and you can't figure out whether you should take profits or maybe close it at a loss and you're not sure what to do with it, or maybe there's earnings coming up and you aren't sure what to do. Any sort of specific information you have that's attached to that chart will help me give you a better idea of what I'm seeing on that chart that would match what you're looking for rather than just random thoughts. Other than that, let's go ahead and get started with a look at the S&P 500 and a chart of the ETF SPY. Now, as you can see, we've had a very, very good start to 2019, enough so that I've actually sort of changed my thought process on the market. For those that maybe were listening to me a couple of weeks ago, especially towards the end of last year, I was expecting a bounce, but I was expecting to short that bounce as we started to approach resistance levels. And while that option is still on the table and it's still something I'm considering, I have definitely changed the tune a bit and have started looking at long plays again. And as a matter of fact, I've recommended a couple of long plays over the last couple of days on Patreon. And the reason for that is that I think the market has definitely changed character and has certainly improved as far as the type of environment that we're in. Now, whether that lasts over the long haul, still not sure. As many of you know, these things can turn on a dime very quickly, and we can certainly shift and start trading lower very quickly, particularly if earnings season starts to maybe give us some bad reports. Now, that being said, one of the reasons that I've changed my thought process on the market and the reason that I've become a little bit more bullish is because we started earnings season this week, and a lot of banks have reported, and most of them have had sort of okay reports, but they've all rallied very strongly after the report. And I think that's the key right now. And I think that's one of the things that's important for the way that I analyze the market is a lot of times people look for news, right? And they look for the reasons why the market's moving up or the reasons the market's not moving up. And what I like to look at more than anything is how the market reacts to news, right? During the best of environments, the market will react well no matter how bad the news is. And during the worst of environments, the market will react poorly no matter how good the news is, right? And so what I'm noticing now is that the earnings, and granted, I'm not a fundamentals guy, so it's not like I dig into these earnings a lot, but the impression I get is that they're sort of mixed, and yet we're rallying very strongly off of them, right? So if we take a look, and before we get into SPY, I guess, let's take a look real quick at XLF, which is the financial ETF, right? And you can see the financials have been running up really strongly, and part of the reason for that was Citigroup was the first one. They had, again, the results were sort of mixed, but we just shot up. Then today we had Goldman Sachs and we had Bank of America, and both of them have rallied very. That's not Bank of America. Let's try that again. right? And you can see very, very strong reactions to the reports and very strong moves up, right? And so overall, we're starting to kick off earnings season actually in a pretty good note, right? And we'll see. We have tech names reporting the next couple of weeks. We have Netflix reporting tomorrow. And then the names like Facebook and Apple report a couple of weeks from now towards the end of the month. But we'll see whether they have an impact on the market and whether that is in turn something that's going to go ahead and affect us. But again, like I said, what's important to me is not necessarily what the numbers are. It's how we react to that and how we react to whatever the story is coming out of the news and coming out of the market and coming out of the earnings reports, right? And so that to me is the key. Now, that being said, if we take a look at the S&P 500 and look at SPY, I think it's pretty clear we are getting to a point now where we should be stalling out and pulling back sometime soon. If you take a look at the action, right, and we draw a couple trend lines here, typically this kind of action is not that sustainable, right? We've got this kind of big rising wedge. We've actually gone through some resistance levels, and we're kind of up at the secondary resistance. And the big question now is, and it was a question we started discussing last week, and at least from now to last week, it's been a positive reaction, but is can we, once we break out of this wedge, right, can we stay inside of last year's major range or base, right? And so for those that maybe weren't here last week or maybe need a refresher, what I'm looking at is this big white rectangle, which for the most part demarcates the majority of the price action last year. Now, of course, we broke down and crashed at the very end of the year, but for the most part, we formed a base throughout the year, right? And that was actually one of the opening thoughts we had at the beginning of last year, was that we could spend most of 2018 trading in a broad-based range, right? And that's what we ended up doing. We created a nice big range. Now, that range was basically separated into three sections. We had the open of the year, where we threatened to crash into top, and then we had the middle of the year, where we had a very nice, easy-to-predict rally and a very nice action that was easy to trade. And then we closed off the year, obviously, with some very poor action, particularly at the very end, right? So what we do have, though, overall, is this nice base. And once we lost that base, and the idea why I was thinking about shorting it was typically when you drop below a base like that and then you come up off of reaction to it, you tend to stall out just below it and then roll right back over. We have not done that. Not on the SPY, not on the Qs, not on the Dow Jones. And so for the most part, the major market indices have all made their way back to varying degrees into the base from last year. Whether we can hold into that is, I think, the key question that we have to ask ourselves right now, right? So that is going to be the key, is can we hold above these price points once we pull back? Because we should be pulling back pretty soon. Now, that being said, there is a little bit more room. When I opened the week on Monday and was looking at trade ideas, one of the things I was looking at was that we're printing nice little bull flags. And they're nice short little bull flags, which for momentum traders is a good way or a good place to go ahead and take some trades to the long side, right? And so one of the trades I pointed out was Facebook. You can see Facebook had a very similar little flag. And typically, you get a nice little resolution off these guys and you get a nice bounce. And that's what we've seen so far. Now, the question is, how much farther can we get off of that bounce? And as you can see on the S&P 500, I think it's pretty clear we have maybe one more day of upside before we come up to some pretty stiff resistance again, which will be not only the 50-period moving average, but this sort of area around 263 that sort of tried to hold us in check towards the end of the year as we started to approach the holidays. Excuse me, before we really sort of rolled over and really exploded to the downside. Now again, that was the resolution to the final part of this move, but it was one of the more drastic parts of the move, because you can see even after we broke down and we started to head lower in the middle of October, we mostly did it in a pretty orderly manner, right? We kind of broke down to the 200 period, chopped around. We did this nice little channel where it was a pretty volatile channel from 280 to about 263, but nevertheless it was a defined range. And then all of a sudden we just really accelerated to the downside into the holidays, right? And we're coming right back up to that area. And again, just the same as this 257, 255 area, these former support levels become pretty important resistance levels as we come up to them, right? So if you've been long, if you've been looking and playing to the long side and you're looking for profits, or where to take your profits. I think as we start to approach this is a good spot to start looking at taking some profits on names. Now, again, it doesn't necessarily mean you're trading the SPY, but in general, any name that's mimicking this pattern and is coming up to these levels that we spent October and the beginning of December in, that's going to be a good area of resistance where we should probably stall out. Now, again, I think the big key is once we stall out, and we can actually reappropriate these trend lines, right? Once we stall out, do we just pull back to 257, or do we continue lower and lose that base again? I think if we lose this base again, then we have to go ahead and start reevaluating our stance and start looking at shorts again. And so I still have an open mind. I'm still looking at possible short trades in case we do pull through these support levels. But as you'll see, as we look at the Qs and we look at the Dow Jones, they're a little bit further along and are hinting that maybe we will not necessarily look at shorts because they are already well above their base and look like they'll stay in those bases even if we do pull back more sharply. But as far as the S&P 500 is concerned, that's how I would look at it. And so ideally, if you're a bull, if you're someone that wants the market to go up, what you want to see is eventually we pull back, and as long as we hold above 257 and start making our way back up, then we're fine. Now, we're not really looking at highs right now. That's not the concern of the market. That shouldn't be the concern of traders. You shouldn't be thinking of, well, when can we get back to 290? I think at this point what we want is just to spend the first part of the year inside this 255 to about 295 range. As long as we're in there and we're not down here, then we're fine, and the market's working as it should. Keep in mind, if we go back to a weekly chart, you will see that sometimes these bases take a few years to form, right? If you take a look at the last time that we had a nice rally and then we sort of topped out, was back in 2015, and we ended up spending almost 2 years, from 2015 to 2017, trading sideways before we really started to resolve in the prior direction and move higher. And that's kind of where we are right now. Now it's a little bit of a different pattern. As you can see, we actually broke below the base, which never really happened, maybe temporarily with some wicks, but never really happened in that big base that we formed a few years ago. And in this case, we've already sort of headed below it, right? And so as you can see here, there's still potential for us to come right back down and lose this base. But until we lose it, we have to assume that the bulls are back in control, and we should be looking at trading to the long side. And again, I think we have to be quick. I think the advice from the last couple of weeks still stands, which is it's more important right now to play defense. It's much more important to protect yourself and not to get overly aggressive trying to trade, not to be the first guy back in saying, well, we're up. We're going up. The bulls are back in control. I want to go ahead and make my way back to 290. I want to buy as much as I can. You don't want to be doing that right now. I don't think that, well, I think that the market character has changed, and I think that there's been a big shift in strength from the sellers to the buyers. I don't think that it's completely 100% done, and I'm not 100% confident that we have totally bottomed and are ready to start making our way back towards the top of that range. I think at this point, all we're seeing is some signs that the bulls are taking control again, and really they've been in control since almost the start of 2019. But we still haven't really tested the bulls with any kind of a correction. We've got one red candle. One red candle in 2019, right? At least on the S&P 500. So far, the bulls have not really been tested. And what I really want to see is what happens once they do get tested. And I think that'll be the key, right? So key levels on the S&P 500, again, we've gone over them. This 256 to 255. Now, again, as I mentioned last week, sometimes these support zones, they're not just one trend line, right? If you take a look at here, we've got a nice little band of price action between the mean of the price actions around 257, but we've got these wicks that go all the way down, even all the way to 252 or 253. But for the most part, the mean of the price actions here in this little $2 band between 255 and 257. So that is the key. If we stay above there, I think we're fine. And I think that the bulls are in control, and that we can start looking at playing some more names to the long side. And I think if we pull back to that level and consolidate in an orderly manner, that should give us really nice setups to trade to the long side once we get back and test that. Now, if you're looking to short, I think you you'd be probably getting a little cute to try to short this 263 level. More likely than not, the better idea is to wait for us to break below 257 and hold there for a bit and then roll over. And then I think that's the higher probability short. But depending on the names that you're looking at, if they reach some strong resistance levels, it is okay to maybe still look at that. I don't think, like I said, I don't think that we've reached a point where we are conclusively in a bull market again, or where the buyers are conclusively in control. I think it's still sort of a mixed bag. And so I would still be okay with that. But I think for now, what I really want to see is us hold this level and look at trades to the long side. Until then, I will be focusing more on earnings trades. As those of you know, during earnings season, I tend to focus on trading earnings and mostly using options strategies where we're not trading direction, we're trading volatility. And that will be my main focus throughout the course of the rest of this month, rather than trying to force trades in directionally when the market is not really ready for that yet. I think that we're getting close to a nice trading spot, but we're not there yet. And so for now, I'm still kind of holding off, and I'm still playing defense, and I'm still waiting for a market that's easier to predict and easier to trade. Now, if we take a look at the Qs, we'll see again, this is what I was saying a little bit earlier. We have much further to go down before we really have to worry about not being in last year's base, right? So we zoom out again. You take a look at last year. For the most part, the Qs traded from about 154 to about 187, 188, right? And we did a good job of breaking back above there. And at this point, even if the bulls do get tested, there's a long way to go before we fall below that base, right? So this is a good sign for the bulls, excuse me, that even if they do get tested, they got a long way to give, or a lot of ground to give, before they really have to worry about sort of being beaten by the bears, right? Looking at the pattern and looking at where we are, there is room to the upside, right? So while on the S&P 500, it didn't look like there was that much more room before we ran into some strong resistance, you can see that on the Qs, we've got about 6 more points of upside, right? From 162 to about 168 before we hit the top of this channel. This was a nice channel that we formed towards the last quarter of 2018. And again, really it was only at the end, when the market really started to fall apart into the holidays, that we lost that orderly price behavior, right? And we're right back in there. We're right smack in the middle of the channel. Typically, trading in the middle of the channel is not that great of an idea. That's one of the reasons I've still been sort of waiting. Even though, again, I think that we have been shifting towards the bull stance a little bit. And as I mentioned with the Facebook chart and mentioned with the SPY chart, we had a nice little flag here. And when you have a market trading as strongly as we have for the last couple of weeks, these bull flags become really good spots to go ahead and trade momentum to the upside. And that's what we've gotten, at least so far, into the next couple of days. We had a nice little move. And we'll see whether that can continue making its way up to the top of the channel, or whether we start to see some weakness coming before that. Typically, in these sorts of situations, it will reach the top of the channel, but we'll see what happens. Again, I think that the market is getting a little bit tired, as you can see by today's candle, and sooner or later we do need to test these bulls, and we'll see whether that happens. Now, as far as what key levels the Qs we can really look at, I think we've already mentioned them. This 168 level becomes pretty critical. It's the top of that channel. We've got the 200 period moving average well above there. We did break above the 50 period, which is a pretty nice step up for the NASDAQ. We'll see whether it can hold above it, but for now, that's a good move. And ideally, we'll kind of come back and retest 156, have the 20 period sort of swoop underneath, and then have the 50 sort of curl under, and then we can go ahead and start looking for a move back to the upside with the moving averages moving up with it. And I think that would be, again, the perfect bull scenario for us to have, very similar to the S&P 500, where we just come down, retest the floor of last year's base, and then from there make our way higher. However, with the strength that we've seen, like I said, only one red candle in the beginning couple weeks of 2019. We're already in the third week, and we only have one red day. So this can continue up a little bit more if the bulls really want to continue holding control of this. And if so, I would say we can move to the top of that channel. I would not expect anything past that channel without any sort of significant pullback or correction. And again, I think that correction, whenever it comes, will be the true test. Now, as far as the floor and where we can look at, you can see there's a couple of levels here, right? And that is, we have the initial level here at 156, and then we have the more important level around 154, which is the real bottom of the base. Now, again, You can see the wicks come all the way down to 150, but I don't think that's really what we should be concerned ourselves with right now. We want to look at the meat of the price action, and the meat of the support that we saw in the beginning of last year was right around 154 to 156. And again, get used to this. When you see a trend line, one trend line doesn't mean that the support level is right there to that penny, right? A lot of times these are support levels because what this is giving you is an idea of where people want to buy. And people don't always say, well, I'm going to buy this at exactly 155.05, right? They say, well, I'm going to buy around the 155 area. I think that's a good price. And so a lot of times you'll have a lot of give back and forth through these zones, but ultimately you'll see where the support is or where the resistance is based off of that. All right, so that's the cues. Again, I think pretty healthy. A lot of room to correct without any real issues. So I think overall this is a pretty bullish chart with respect to where we are right now. Now, I'm not bullish where I'm expecting to move back to highs, but bullish in that I expect us to hold in last year's base a little bit longer. Now, if we move to the Dow Jones, and again, you'll see we're pretty firmly in last year's base, right? So zoom out again. Take a look where we spent the majority last year. You can see the floor to the price action was around 235, and we're well above that. We're all the way up to 242. Now, just like the S&P 500, it feels like the room to the upside is a lot more limited than what we're seeing on the Qs, right? You can see the 50-period moving average right here with this level around 244, which is almost the exact sort of pattern that we saw on the S&P 500, right? Where we broke down from the highs and then we printed this channel with about 3 tests on each side, and then we really lost it towards the end, towards the holidays. But we've kind of come all the way back up into this range, and now we're starting to get to this point, which, again, is pretty important because this is right where the market really kind of lost itself, right? Was now again, it's all relatively speaking, right? But we were trading in pretty orderly correction up to that point, and then we really just swooped to the downside. We're coming right back to the scene of the crime on the S&P 500 and on the Dow Jones, and so it's critical to see what we do there. I expect us to find more resistance and a stiffer test than what we saw at the bottom of the space at 235. And ultimately, like I said, I think the key is how we react to that. You'll see again, we've hit the 50. A lot of times, when you're clear on one side or the other, you cross the 20 for the first time and hit the 50, you'll get a chop in between the two moving averages as you kind of wait for them to move back, and you have sort of price sort of kind of revert back to the mean. Excuse me. And we've reached that point where probably we stop here and we chop in between the two moving averages. And like I said, I think the key is as long as we stay above 235, we're fine. We don't want to lose that level. We don't want to fall back below there. And if we can stay here, then again, I think the bulls are in control. And I think that's the key is, can the bulls maintain control over the market, and can they sort of put this correction that we saw last year in the rearview mirror? If that's the case and earnings continues to be good, well, then we can start looking at exploring into this area, into the mid 250s and possibly even higher. Still a long ways away. I think we still need to see what happens, particularly with the FANG stocks and their earnings reports. But for now, we just want to make sure that when we do have some selling, it doesn't completely take over the market and we start to lose all these levels and start to approach lows again. I think that's really the key. And when we do finally get some selling pressure, as long as it's sort of not volatile and stays within our patterns, then we can start looking at buying those dips and start looking at really maybe being a little bit more confident in playing it to the long side. Finally, we have IWM. And as you can see, the small caps are a different picture altogether, right? They actually are still knocking on the door of last year's base, right? So again, we zoom out and close another one of these ads, and you'll see here's the big base, and we're not really there yet, right? So this is by far the most bearish looking of the charts. If you are looking to short and you still don't really have confidence in this market, then I would say focus on the small caps, because they're the ones that are likely to fall first, and they're the ones that actually have struggled to even get back into their previous range, right? So this would be the area. Now again, they did have the nice little bull flag, just like the other market indices. They've had a very nice move up. They've only had 2 red candles in 2019 instead of 1. I think overall still pretty good. But as you can see, we're really bumping up our heads into some stiff resistance now. And I think I think that if we stall out here and roll over, it's not really an indictment on the market in general, because the other indices have all done well and have proven over the last few years that even when IWM struggles, the market itself can still hold up fine as long as the other indices just sort of carries a little bit of extra weight, right? So I'm not looking at IWM right now as a signal to give me, an advanced warning on whether the market's going to drop or not. That's not what I'm looking at IWM for now. Matter of fact, I think it's quite the opposite. I think if IWM gets back into its base and continues to chug on higher, then I think that's a really good sign for the markets. If it stalls here and rolls over, I'm not that worried. I think, again, for me, the key thing to worry about would be if the other three indices fall below and outside of their base from last year. I think if IWM falls here and doesn't make it into the base, I think that's sort of the expected price behavior. And I'm not that concerned about it. Now, of course, if we roll back to new lows on IWM, then that's a different issue. But I think for now, IWM, again, it's in between the 50 and the 2 and the 20. And as long as it chops between those two moving averages while the other indices sort of maybe show a little bit more health, then I think we're fine. And I think that's really the key with IWM. We're not expected. Again, the market, we're still in a fearful place, right? Despite the fact that we're starting to see some buyers step in and we're seeing the bulls sort of in control, there's still a lot of fear in this marketplace, and deservedly so. And as long as we see that, the small caps are going to behave worse, right? Because they're more volatile, they're more risky. There's a little bit less faith in them as far as the types of names you hold and try to weather the storm with. And so at the first sort of sign of selling, these are going to be the first names to get hit, right? So it's expected that they're underperforming, and I expect them to continue to underperform until things change dramatically in the markets. And I don't think that we're anywhere near a point where we should be seeing IWM lead a rally higher. All right, so that's really it as far as the four major markets are concerned. The key levels on IWM I want to share real quick, just to reiterate. 145 is obviously a critical resistance level. If we can actually get above there, well, we've got a lot of room. We've got a room all the way up here. Even this trend line, that's really not that definitive of a trend line. I could draw it like this or like this, and there's not really a defined resistance level that I could draw well with this trend line. I'd say that somewhere around 154, which is the last point we topped out, maybe it's the next level of resistance, but there's plenty of room to the upside if IWM could gain traction and break through there. If it fails, then I think more than anything, we just need to look at the moving averages, see how it behaves as it approaches those. Overall, like I said, I think we've seen a shift in character. I'm not nearly as worried about the market as I was a couple of weeks ago. I'm not necessarily 100% confident that we're done correcting, but I think that there's been enough signs here where I think pretty soon we can maybe have a little bit more of a sure sign that we're done correcting. I think that's what we're looking for right now. But I am still holding out that there's a chance that we roll right back over. And like I said, a lot depends on how we behave once we do have some selling come in. We haven't really been tested yet. Once we get tested, what happens and how do the bulls react? How does the market in general react? And I think that'll give us the first real clue as to what we can expect as we continue to move into the first quarter of 2019. We're going to take a quick look at the US dollar. We'll look at gold, silver, and oil. And then we'll move on to the chart request. Again, if anyone has a chart request, we've actually got quite a few of you guys in attendance today. So if anyone wants to give me an idea, I know, Lana, I know you want to look at NFLX, so we'll have that on there. But anyone else, if there's a name you want to look at, feel free to put it in there. I'd love to see what you guys are thinking, what charts you guys are looking at. Again, it may not even be a chart request like as far as a name you want to trade. Maybe it's just a pattern that you're not sure of, or something you're seeing, some kind of candles, you're not sure what they indicate. Anything along those lines is fair game. Just feel free to put it in the chat, and we'll take a look at it. All right, so here's a look at the UUP index, which is the U.S. dollar. We had the Fed come out a couple of different times recently and say that they might hold off on raising rates, which, of course, is part of the reason why the market's been acting a lot better. And theoretically, that would be a little bit bearish on the U.S. dollar, right? And as you can see, the U.S. dollar has struggled over the course of the first month, or the new month of the year. And while we've had a nice bounce over the last few days, overall, you can see that the U.S. dollar has definitely started to struggle. Now, Interestingly enough, if we look at the euro-US dollar cross, keep in mind again this is inverse, right? The euro is making strong headways versus the US dollar. It looked like maybe it had finally bottomed out and was going to start rallying. Now again, this is a major level that we're at here on the euro. If we go ahead and take a look at a weekly chart, you can see that 114 is a pretty critical level. This was a major base that formed from 2015 to 2017. We were able to break past it, and we've kind of come back, and we've been spending a lot of time retesting this level, and it seems like from week to week is a complete shift in narrative, right? If we looked at this just 4 days ago, this looked like a really strong move, and the euro was ready to break out. And then, of course, we had more Brexit issues, and all of a sudden the dollar gained strength against the euro, and it's kind of come all the way back down to 114. It continues to struggle against 114. This is the most important chart if you want to look at the strength of the U.S. dollar and see what it's doing, right? And for now, we're right back here where it's really in the middle of nowhere. And I'd say right now it's fair game to go up or down from here. It should bounce just based off of what we're seeing. We've got a nice trend line. If you take a look at it like this, it's a retest of this triangle breakout. So ideally, this would be a spot where the euro could gain some traction and maybe put some more of those some of those Brexit worries behind, and it rallies here. And if so, then we could see the U.S. dollar start to weaken a bit more. But for now, I'd say that it's still up for debate as to what happens. We have to see whether there's confirmation of support here. Now, if you look at the U.S. dollar versus the Canadian, you can see the U.S. dollar has lost a lot of traction. And it recently had a nice little bounce as well. But overall, it looks like it's printing a bear flag and wants to resolve a little bit lower. So I would say that this also is indicative of a U.S. dollar that probably needs to roll over a little bit more. But that being said, it has reached the support zone where it could bounce, right? So I think it's still up in the air. But I think that this one, again, we're looking for resolution to the downside and further U.S. dollar weakness, right? And then finally, we have the U.S. versus the yen. And this one, again, was forming sort of a bear flag, but you can see resolution coming to the upside, right? And that is not really a surprise. We've had a pretty big drop. We had a drop, we had a bear flag, then we had a drop, and now it could be starting to form a base here. And if that's the case, this one actually looks like it's a little bit bullish for the U.S. dollar. So a little bit of a mixed bag here as far as the U.S. dollar is concerned. I think that's what we're seeing on the UUP index. Ultimately, I still think the U.S. dollar probably struggles a bit. And if that's the case, it should be okay for oil, gold, and silver, right? So we're going to look at oil first. You can see oil has had a really nice run up into the top of its base here. A lot of those oil names that Frank and I discussed a month ago are doing a lot better and have started to perform a little bit better. And a lot of that has to do with the fact that oil finally found its floor. And again, the floor was pretty well defined. It's the floor that we spent a good portion of the last 3 or 4 years in. You take a look from 2015 to 2018, that $40, $42 area was actually a good area of support. And the 54 to 55 area has been a pretty good level of resistance. Now, of course, we've had big moves through there. But for the most part, oil has spent the majority of the last several years trading somewhere between 54 and 42 or $41, right? So we're right back towards the top of that. We're setting up a bull flag. Looks like it wants to test the 54 to 55 range again, and then from there we'll see what happens. But oil again looks like it wants a little bit more room, a little bit more of a move to the upside. If we look at gold, gold is setting up a nice bull flag as well. And this was a trade. Hopefully you guys have been in. Those of you that follow, this was a trade. Every Wednesday we go over gold and silver, and I recommended a long trade on GLD right here when it was breaking 115 back in November. And this has actually worked out really well. Those of you that follow me, those of you that follow me on Patreon, those of you that follow me on Twitter, have hopefully taken some of our gold trades and have profited from this big move. This actually looks like it wants more room to the upside. It looks like maybe we can get all the way up to about 124 on GLD before we really need to see what's going to happen next. But typically this resolves to the upside, and it looks like it's trying to get ready for a break to the upside. And if that's the case, then again, I think from here, playing to the long side, I'd be looking for a move to 124. SLV has been playing catch-up, and you can see it's got a nice little flag as well. I still prefer GLD. as opposed to trading any kind of silver name. I think silver's got a nice flag here, but even once it breaks this flag, this 1480 is a very, very critical level. And I'd like to see more strength out of silver before I decide to trade it, when I could just trade gold instead and be a little bit more comfortable with it. They both trade the same, so why not trade the stronger one, right? So for now, I'm still kind of off of silver, but I will say that it has behaved a lot better recently and is similar to gold in its printing a bull flag and wants to make its way higher. But again, I think I'd rather trade GLD or GLD related names like gold miners over that. And I think this is a good place to be if you're still fearful of the market. Now, the miners still do have some correlation to the market, and they still do suffer from some volatility that comes in. But they've been performing pretty well when the market has been performing poorly. Now, the idea here is that the market's starting to behave a lot better, so some of these miners have sort of slowed down. But if the market starts to pull back again, maybe the miners pick up a little bit more steam. But either way, a lot of them are printing nice bull flags, very similar to these, and make for decent plays if they can sort of resolve to the upside on that. And that pretty much covers it for oil, gold, and silver. Again, I know that a lot of you guys don't even trade this, but I like to spend time on here because it gives you an idea of some of the different commodities or areas that you can trade when the market's not performing well. And I think that's sort of the important thing here. A lot of times the market doesn't give you a good environment, right? But if you are versatile in your ability to trade, if you could trade the Forex markets, if you could trade something like gold, it keeps you from really struggling and trying to force the issue when the market's not giving you a good environment. And so it's important to just look across the board and see if you find bigger patterns in play that can help you sort of predict what's going on in some different areas or sectors when the area that you sort of favor isn't really behaving well. And so that's one of the things I like to do, and that's part of the reason why I look at some of these individual currency crosses and then look at gold, silver, and oil. Other than that, let's move on to the chart requests again. We've got a lot of you guys in here, pretty healthy amount of attendees, and a couple of new people too. If you guys have questions, please feel free to put a chart in there. I'd love to see what you guys are looking at. Now, Alana, again, you wanted to ask me about Netflix. Now, I know you're in this, and the problem I have with this and the problem you have with this is that we have earnings, right? Earnings are coming up tomorrow. And you'll notice with Netflix has a history of trading pretty volatile during earnings, right? You've got 9%, 14, 10%, 13, 2%, and then 14, 20. So yes, we had one quiet report, but for the most part, you can expect this thing to move a good 9 to 10 to 15%, right? So this is the problem I have with trading directionally through earnings, right? Here's a big name. Here's a big move. And at this point, if you want to hold this through earnings, you have to assume that this thing can move $35 to $70, which could put you all the way back down to probably a losing trade instead of a winning trade. Now, of course, it could double your profits, but that's not really something that I recommend as a trader, right? So I like what I'm seeing out of Netflix. I think Netflix is one of the first of the tech names to really sort of break the downtrend. When we take a look at, again, we looked at Facebook earlier, but I'm going to point it out again. We had this strong downtrend and Facebook finally broke it, right? And so sort of showing that maybe the market's done correcting because these FANG stocks tend to sort of lead the way, right? So you can see Facebook has broken that trend. Netflix has broken that trend pretty strongly. We take a look at Amazon. Amazon broke the trend as well. As you can see, starting to move higher. Now, Amazon, again, was a little bit less volatile to the downside, but same sort of idea. Google, not really there yet. Depending on how you want to draw this trend line. I think if we draw like this, you could say maybe it's starting to, but if we draw this trend line, still plenty of time. I would say Google's still working on breaking that downtrend, depending on how you want to draw that trend line. And then Apple Apple's well behind. Very, very steep downtrend. A downtrend so steep that it doesn't even make sense to draw a trend line. But it is actually trying to break that downtrend as well. But you can see Netflix well ahead of the other FANG stocks, right? So it's been performing very well. However, that doesn't necessarily mean anything as we approach earnings. And I think that's the problem, right? Is that this could be a run-up into an anticipation of good earnings, and then what happens is even though they have good earnings, it was anticipated, so it stalls out, right? So I think at this point, if you've traded this, the idea is you want to either take profits or reduce your risk. And there's different ways of reducing risk, right? You can either just close out half the trade or close out 3/4 of the trade and just hold some shares. You could buy some puts, which could be pretty expensive because of the volatility coming into this. You can replace your trade with an options play, which makes sense, right? So for instance, you can maybe close out your trade, take the profits, and then use a small portion of the profits to buy call spreads or calls out of the money to and maybe look for a bigger play. Or you can sell calls and then buy puts and then protect yourself in that sense. You protect yourself for free, but you cap your upside. There's a lot of different ways of doing it. And in my earnings workshops, or anyone that subscribes to my earnings subscription in Patreon, we go over a lot of those different ideas and maybe work out the best one. That's something I used to do with Frank all the time when I had my earnings workshops, was he would come in and say, well, look, I have this name. How can we replace this, or how can I put in a play? And a lot of times we'd find a good play that's free where he'd be able to make more money to the upside and protect himself to the downside. And there's a lot of ways of doing it if you're creative with options. And I think ultimately, though, the idea here is you need to protect yourself from the volatility. It's just good risk management. A lot of times people take the gamble and they hold out hope that it goes up even higher. And if it works out, that's fantastic. But if it doesn't work out, the feeling that you get from it not working out is a lot worse than the good feeling you get if it does work out, right? So I think ultimately you need to protect yourself in this situation, and it comes down to how you really want to protect yourself. Now, if we look at the levels, and again, I don't have my Thinkorswim open to judge what the expected move is, but I'm going to guess that the expected move on this right now is probably in the neighborhood of 10%, right? So that's going to be about $35, which means that we're looking at somewhere around, what is that, 387 to 389. So right up here should be the expected move to the upside. And to the downside, we're looking at somewhere in this area, right? So it lines up with decent support and resistance levels. And so you can expect, assuming it was about a 10% move, you can expect something on Netflix, something like this, right? Something like that. If you're okay with that, then go ahead and hold. Now again, keep in mind, there's always the possibility that Netflix moves 20%, right? And I think that's where it becomes a critical issue: is are you cool with the move down to 290, and giving up basically the entirety of that rally? And again, it's not like this is like, oh, this happens once in a blue moon. You can see Netflix 20%, 19, 18, 26, 18, 28, 44, 26, 25, 37. A lot of times that this thing moves a lot more than 10, 15%. And because of that, you need to always protect yourself. And again, remember, this is the key going into what I was saying last week and the week before about playing defense. The most important thing for you as a trader is to protect yourself. It's not to try to make profit. Now, of course, we're in the game to make money, right? We're not in here to sort of sit there and not do anything, but you always want to play defense first, right? Anytime you enter a trade, the first thing you should look at is how much you can lose and where to stop out. It's not how much you can make. The profit sort of takes care of itself if you could take care of how much you lose, right? And that's really one of the only things you could really pay attention to is what your risk is for any particular trade, and understanding what your risk is and controlling that. And if you can control that, then everything else takes care of itself. And so that's the basic idea here with Netflix. I could give you I could read all kinds of technical analysis stuff on here, but it's not going to make a difference once earnings comes in. It's going to move 10 to 15%, and if it does, then you have to be okay with that. Now, that being said, when a stock runs up like this, a lot of times it favors a move less than the expected volatility. I haven't done the research yet. I haven't seen what the options are. I was going to do that later today and tomorrow. And then I'll decide what options play I want to take on this, whether I want to sell volatility or buy it. But in general, you can't really predict the direction here. And it's much easier to sort of just, if you're a swing trader that just trades directions, to not expose yourself to too much risk. I think that's really the key. And I know this is it's a long-winded answer to the same answer I gave you in one sentence in the Discord chat, but it's the same thing, which is basically, earnings is too volatile, so you probably want to reduce your risk. I think that's the key. And by the way, there's a lot of you guys, a lot of you are new here, or names that I don't recognize. Frank and I have a Discord chat. It's free to join. If you guys have any interest in that, we'll go ahead and put the chat, the link to it. You could join us and talk to us during the day. Let me see if I could find the link for it. All right, here we go. I'm going to put it in the chat. So feel free to join us. That link expires in a day. Not that you can join, and as long as you join, you could be in there as long as you want. Just those links constantly refresh. So if you want to join us, just go ahead and click on that today. And again, we have a lot of futures trading going on in that room, but we have all kinds of regular discourse on different things. And so if you guys want to have more access to us and more somewhere else to go ahead and bounce trade ideas, feel free to join us on that Discord. We're always looking for new members. So that's pretty much it. Lana, do you have any other questions on Netflix? My Twitter, it's what I mentioned earlier. It's just stockdarts. It's at stockdarts. I'll put it in the chat also. I highly recommend any of you guys, if you like what you're seeing here, just follow me on Twitter. Every time I put something on Patreon or anytime a webinar is coming, I always just tweet it out. So, and obviously it's free, so no big deal. And all right, cool. So that's fine, Lana. So you understand. So yeah, that's basically all my thoughts on Netflix. Again, anyone else have a chart request? We still have plenty. We still have a good 10 minutes to go. Here was a couple. While I wait to see if someone else comes up with one. So a couple weeks ago, we were looking at oil names, right? So Frank and I were discussing playing some trades on oil. And so here's ConocoPhillips. And again, you'll notice a lot of the same things, right? We'll have these, and it's interesting because it's a completely different sector. But look, it's the same exact thing that we're seeing on these tech names, right? We have the nice drop, and then we have the bull flag, right? You'll notice that on ConocoPhillips, Exxon's not quite the same, but the same sort of idea. Suncor again, the little bull flag, but not quite the same break of that. And if you could recognize these patterns, it'll help you out. You'll notice them across the board, and I think that's one of the reasons that I'm so big on analyzing the market, is because a lot of times those patterns that we see in the S&P 500 or in the Qs, they sort of reverberate across the market, and you'll see a lot of the same patterns across a lot of different equities. Ray, you have a question about CMG. All right, so first things first, let's take a look at the report. By the way, one other recommendation, a very strong recommendation I have, and on the heels of the Netflix, every single trade that you look at this month, guys, always go look and see when they report earnings. You do not want to get caught with your pants down here and enter a trade in a name that looks like a great pattern and they report earnings in 2 days, because then you're gonna wake up to a gap down or a gap up, and maybe it works, maybe it doesn't, but you could be in a situation that you did not anticipate. And again, you can see, look at the randomness here, right? It was up 25%, but it was also down 11. It was down 15, up 4, down 10, up 8. Like, it's all over the place, right? And it's really, take it from someone that's traded earnings, dedicated trading earnings for like at least 5 or 6 years now. There's no rhyme or reason to whether it goes up or down. And it's not something you want to get caught by surprise on, okay? Now, that being said, Ray, you're looking at CMG, and my question to you is, are you looking to enter a trade on this, or are you looking to take profits on a trade? Because, frankly, entering a trade right now does not seem like a good idea. You can see there's huge resistance overhead. We are severely overbought here. And coming up, to buy this right now would be just the ultimate in chasing a stock. You're in long from about 505, so you just bought it. I would say, Ray, depending on how you bought this, you could look at selling some calls on it and maybe take some extra profit that way. But what I see here is a stock that's getting ready to correct. Now, again, not necessarily what you did. It's the same idea that we're seeing in the market, right? Which is, it just printed a bull flag. And is breaking out of it, right? So the momentum is to the upside. My issue with it is that, again, it's up so much and it's coming up into some pretty stiff resistance. Now, that being said, you're in, you're up. You're up 10 points, right? So I wouldn't just close it. Whatever. Okay, so you can't sell calls. Okay. I wouldn't necessarily close it because you're up and it's performing well, and there's always a chance that it breaks this resistance. It's just because it topped out here before doesn't mean it can't break it. But what I would do is I would have one foot out the door, and I would trail a stop and make sure that you don't get caught with your pants down if it does correct. But if the market continues to climb higher, well, this has shown some relative strength and can certainly make it up another 10 points from here, and make it a bit higher, right? So, it's okay to trade the momentum, which is what you did. 505 was okay, as far as trading that bull flag is concerned. And you have more upside, so I wouldn't necessarily just close it, but I would definitely make sure that this doesn't turn into a loser for you, okay? Because again, it's starting to get pretty overbought, and it's starting to approach some pretty stiff resistance, and we'll see what happens. But for now, and then of course, I mean, I think at the rate that we're talking, we don't have to worry about earnings, right? Earnings is February 6th, so that's a long time to go for the scope of what we're looking for on this. So at least you don't have to worry about that. But I would just follow the momentum to the upside and see if you can get a little bit more off of it, okay? And hopefully you can. And if you can, it can make its way up to 525, 528, and you'll pick up another 10 points. So there is at least 10 more points of upside, but you don't want it to fall below your entry, and you certainly don't want it to fall below 498 to 500, obviously. And if it falls below there, then I think that this is one of those names that, a lot like the market, is starting to get pretty steep. And sometimes when these patterns break, there's pretty swift selling to the downside. So just be kind of quick on your stop, but try to follow the momentum a little bit higher. You could probably get more if you just continue to trail a stop. Okay. Now, another name. This is a name, by the way, that you first brought up, Ray, and has worked out well for myself and for any of my Patreon followers. Is Tandem. I don't know if you finally got into it, Ray. I know you've been asking me a bunch of times. You had asked me way back when it was still trading this long channel. And for those that are, you can look at it. it's done very well while the market is corrected throughout December, November, December, in the start of this year. It never really faltered, right? And it eventually shifted from correcting to moving up, and it's done a really good job. And so this one's actually done really well, and is starting to look like it wants to make its way back up higher. But it's done really good for anyone that has followed me. You got to put these on watch lists, Ray. It's so funny. You're the first one that brought it up, but anyone that follows me on Patreon knows that I've recommended this thing a couple times, and it's done pretty well and it's behaved well. It hasn't really gone up a lot, but it's done really well in the face of a pretty ugly market at the end of last year. And then finally, since no one else really has any chart requests, I will bring up one of the ones that gets brought up a lot, and that's CGC. And the reason I'm bringing it up today is because it had recently good news on it, I think with some kind of a deal with New York, and it actually bumped up pretty good. And it's done a good job of stabilizing. Again, huge volume coming in, so a lot of buyers stepped in again and have put it back up above this key level here, which is this $32 range, right? So it's back above there and holding up. And a lot like the markets, I want to see what happens once it sells off. If it comes back to this area, this is a really good buy area around 34, 35. And would make sense for anyone that still wants to get involved in any of these marijuana names and is looking for a good support play. Anytime it comes back into this area, you should look at it. Now, again, the last time it came into that area, it did falter, but it ultimately now has come right back above it, and you can see all the moving averages coiling underneath and sort of starting to turn back upwards, which is usually a pretty bullish signal and the mark of a trend. Now, I don't think it's necessarily there yet, but once these moving averages start to come up and spread back out, that's a big sign of a strong trend. Now, I don't think it's there yet, but like I said, I think it's the beginning formations of what could be a good trend on this. All right. I guess that covers it for today, guys. I want to thank you for participating, those of you that added names. I want to thank you for attending, those of you that attended. There's a lot of attendance there. Feel free to give me any feedback. Those of you guys that were in here that didn't really say anything, you can always message me on Twitter. You could join us. You can tell us anything on the Discord. Love to hear your thoughts, whether you think I spend too much time on the markets, whether you think I should spend more time on them, anything along those lines to help improve this for you guys. It's a brand new year, and I'm hoping to do this. Hopefully this year we can sort of grow a lot and get a lot of new traders in there. It's really simple, Ray. You just go on to there and you subscribe, and I mean, it's pretty easy to follow the links. And I'd love to see you guys on there. Those of you that are on Patreon or want to see me on Patreon, go ahead and visit me every day, right? I put in stuff at least 3-4 times a week. Some of it's free, some of it's not. But yeah, I'd love to get more thoughts on what you guys are looking at and what kind of articles you guys are looking for. I'm always willing to give you guys more information as much as I possibly can. And those of you that are seeing this on Twitter, on YouTube, feel free to hit the like or subscribe and hit the comments button. Give me some comments or feedback on there as well. I will be uploading this to YouTube once we're done with this. Other than that, I hope you guys have a good rest of today. And as always, we'll meet again next Wednesday.
Hey, good job, Rob.
Thank you.
Talk to you later.
I will see you in the Discord in a little bit.
Yeah, I'm just heading to lunch.
Yeah, me too. All right, guys. Have a good rest of the day.